Mark, good to see you. An important topic today, defining your risk tolerance and expectations for returns. The relationship between risk and return is fundamental when it comes to investing. Generally, higher returns come with higher risk, and lower risk typically means lower potential returns. So, to start, can you explain what risk tolerance is and why it's so important for investors?
So when you think about risk, it's really the willingness of somebody to make a greater return, but they have to realize they could lose
Right.
more or lose all of their investment. So it's really finding that common ground as far as what someone's risk tolerance is.
hmm So, then how do you go about helping clients define their risk tolerance?
Well, there's a number of tools that we can use. And the main tool that we use in our practice is what we call a risk profile questionnaire. I know a lot of people have probably filled these out,
Yeah.
and it's a very good tool to make an initial baseline assessment of where someone kind of fits in a box. Are they a conservative, moderate, whatever they are? But I think more than that, it's through the counseling, through knowing your client, knowing what their goals and objectives are, ultimately is going to define where they should be as far as how much risk they need to take to meet their plan objectives.
hmm Can an investor's risk tolerance change over time? Do changes in the market change our risk tolerance?
Well, yeah, absolutely. I mean, if you think about like people that are accumulating wealth, I mean, they could theoretically take more risk because they don't need the money and they've got a longer time horizon. But somebody that's maybe 3 to 5 years from retiring, they should be looking at that very closely and really tightening up that risk. At the end of the day, if we can manage or mitigate that risk on the downside when we have those negative cycles, ultimately what we're going to have is we're going to have more net spendable cash flow throughout our retirement period and really more real wealth. And that's what we want to build in the portfolio because obviously to meet our goals and objectives, we want to create a surplus of capital. So if bad things happen, unexpected things happen, we've got a cushion to rely on that won't throw us out of the ball game.
Right. Well, and you had mentioned people coming to you for kind of a second opinion on their portfolio, and you've said that sometimes they're taking on a lot more risk than they need.
Yeah, so a lot of what we do on the front end is we'll do an initial risk analysis to really help people understand how much risk they're taking for the returns they're getting currently, and then ultimately looking at maybe, hey, maybe it's just some minor rebalancing that they have to do to make some changes to really make a better outcome. That's and again, it's refocusing them on plan objectives and meeting their retirement goals.
Right. So, Mark, if somebody would like to talk through and define their risk tolerance with you, what's the best way to reach you?
Yeah, the best way to reach us is they can just give us a call, pick up the phone, call us 303-681-0113. And anybody on our team is more than happy to talk to you about this. We can set up a phone call, an in-person meeting, a Zoom call, whatever you would like. And we can really start discussing these things and really understanding where you're at. The other way is you can go to our website, mcgregorwealth.com, and we have a calendar link. It's very easy to do. It links right to my calendar, and then we can set up a call or a Zoom call that way or an in-person call.
Be a really important conversation to have. Mark, thank you so much for your time today. I appreciate it.
All right. Thank you, Aaron.